Good morning. It's Tuesday, October 21st. I'm Phil Streible, Chief Market Strategist at Blue Line Futures. So, looking at some of the top headlines, the overnight price action, the precious metals markets, because gold and silver, they have fallen sharply here. You do have gold futures down about $85. That's about a 2% move here at 42.72. The overnight range was about $140, and the lowest level that we were at, which was right around 42.57, that puts gold down about $100 on this session. You look at silver futures, down about $2.36, sitting at right around $49. The range on that market, about $3.50. So quite a volatile ride. But what I'll do is I'll look at the average true range on the gold silver market and see if this is really out of the characteristics. And what you want to throw up on your chart is that 14-day average true range. You'll see on the silver market, it's about $2.09. So to have a $3 move, given where we've been at and the run up that we've had, you could understand that a lot of stop losses are getting hit. And what those stop losses do is they become market orders to exit the market. And that's where you get this kind of snowball effect here of lower prices. But silver futures haven't broken through any critical levels here that I would be alarmed about at the moment. You also look at the gold market, that average true range about $95. So remember that volatility, it works both ways here. It works on the upside as prices continue to move higher aggressively, and it also works on the downside, and that's where you get these large fluctuations back and forth. Now, gold, a classic safe haven. It did dip from its record high as the two sides between the US and China are going to return to the negotiating table. Now, before these talks take place, Trump signs a landmark pact with Australia to boost America's access to rare earths and the critical minerals in an effort to counter China's tight grip in the sector. So we're seeing shares of gold and silver companies, they are tumbling on the pre-market trading. So again, looking at that price action, you go outside of gold and silver. You got copper down about 1% here, just below that $5 area. Saw a lot of people adding to the copper market yesterday. Platinum futures down about $70 with a low of 15.55, down about 4%. And then palladium down about $88 here with the gold to silver ratio sitting at about 87 to 1. So big boost up in that gold, excuse me, to silver ratio. Now, one of the more fascinating stories that I read over the weekend, it was a story how the perfect storm of events coincided with this drain of silver and this explosion in prices higher. It was the India's holiday season here with hundreds of millions devoted to buying billions of rupees worth of the jewelry to celebrate their goddess. Now, stick with me on this story here. India's social media, one of their stars promoted the idea that after gold's record rally, that silver was the next one to soar. And just as that Indian demand was taking place, China, a key source of the supply, was closed for a week-long holiday. So the bullion dealers, they had to go to London because of the fact that they discovered that precious metals, and specifically the silver market, was really sold out across the country of India. So they had to go over to London. And what they found is that that was also sold out because London's vaults, well, underpinning the global markets, holds about $36 billion worth of silver, but the majority of it is owned by those ETFs that are backed by the physical precious metals. So the lease rates exploded 35%. And then since then, those lease rates have come down to 19%. So the reason why I find that story to be fascinating, because of that upward trajectory that we saw in silver, and everyone was talking about sellouts in silver, no physical supply out there in India, and then also those lease rates. When I read something like that, I wonder how much of this recent rally has been attributed to that scenario, and has the Indian buying spree ended? Is China back to fully supplying silver to those market needs? Is the supply strain in London being fulfilled? So we're seeing lease rates come from 35% down to 19%. And how much of the price action reaction is the unwind of that specific trade? So I'm not looking for answers. These are just some thoughts and some questions that I have in my particular head. Another thing here is that you see Trump making this rare earth deal with Australia in an effort to fight China. So the US and Australia, they're jointly invest in mines and processing projects in Australia to boost the production of critical minerals used in those AI and advanced technologies. So the agreement includes Australian processing of rare earths and critical minerals, and the US and Australia pledging to protect their domestic markets from unfair trade practices. So the deal will begin with the US and Australia paying each other about $1 billion over the next 6 months for these initial projects. So does something like this increase pressure on the precious metals, or I'm sorry, does it take a significant portion of those flows that were going in the precious metals, specifically the gold market, because the gold market has been linked to those trade tensions with China and the competition for those rare earth elements. So if we could source the materials from some alternative supplier, will the tariffs being imposed on China still really matter? Because the whole fight has been about these rare earths and these magnets and things like that. And could that lead to some of the liquidation in the gold trade? And I believe that that's where you're getting a few of these stories coming out. So not that the market is going in any kind of bear market or anything like that. I'm not saying that. I'm just saying that some of these headlines here, they reach a boiling point. Remember, in commodities, that supply demand structures change, investor appetite does change as well. And that's where you have some rotations here taking place in these markets. Now, the critical levels of trend support that I'm watching in the gold market is 40.64, still about $200 higher from there. Silver 47.78. Now the overnight lows were 48.10, and just because it comes down to that level there and bounces off, it doesn't mean that any trend support was broken. You want to see it close below that level and then a continuation lower before I'd have some serious concerns about the market. Now you look at the stock market here and some of the things coming out. We're seeing a dollar advance against most of its peers here. It's the only one that's green on the screen, and investors are weighing in those trade tensions here, the impact of the upcoming U.S. inflation data that's coming out here. So you're going to see some volatility heading up because we haven't gotten any kind of data prints in quite a while here. So you want to keep an eye on the dollar index. You also want to keep an eye on 10-year treasury yields, because 10-year treasury yields have been banging off the low end of the curve here. The S&P 500 backing off just a bit here as it's logged its biggest two-day gain since June. So again, that inflation data coming out. We'll also have inflation data in the UK set to report on Wednesday. So we'll want to watch the British pound, because a lot of these other countries here, they're going to continue to release their data. And remember that the dollar index is this inverse basket of currencies. It is component of 6 different currencies: the euro, the yen, the pound, the Canadian dollar, the Swedish krona, and the Swiss franc. So if we could watch that type of particular data, we could see the impact on the dollar index, and then that weighs in on treasury yields and it weighs in on the gold market. And again, it's just one variable in this, is there's a number of different things that impact gold and the gold market. Now looking at the S&P 500, down about 10 basis points here. So just a little bit lower on the session, 67.67. You do have the NASDAQ down just slightly as well. Remember, the next big test here for the tech-fueled rally here comes as a bunch of companies accounting for about 15% of the S&P 500's total market value will report this week. You've got Netflix, General Motors, Coca-Cola, Texas Instruments. Those are amongst today's highlights. And of the 60 of the S&P 500 companies that have reported so far, 85% of those have beat estimates. So again, going back to kind of the temperature and the pulse of the market here, you got the dollar up 28 at 98.63. You got 10-year treasury yields down 1 basis point at 3.97. You got VIX futures up just a bit here, up 27 points at 18.70. If you're in that October VIX, you want to roll over to the November contract. And then taking a look at the global markets here, you do have European stocks. Well, they were a bit steady. Asian stocks, they held their record highs. The MSCI Asia Pacific Index was supported by Alibaba and also TSMC, and virtually every market in there was in the green across the board here. So again, those Netflix earnings, where they're looking at steady subscriber gains and rising average revenue per member, should keep Netflix on track for its 17.3% sales growth in the third quarter, with potential margin upside that could lift the 2025 guidance. That's all according to Bloomberg Intelligence. If you look at the economy, no meaningful economic data coming out here. Central banks, they are in their external communication blackout period until the 30th. You look at the CME's Fed watch tool, you got a 98.9% chance of a 25 basis point interest rate cut, 1.1% chance that they do leave things unchanged. Now, something else to keep an eye on here is the ETF flows with regards to gold and silver, because they did increase their gold holdings for the 7th straight day. They were also buying silver, so they added about 332,000 troy ounces of gold holdings in the previous session. Gold's been up about 62% here year to date, and you look at the 7th straight day of growth here, the longest winning streak since September 2nd. You go to the silver market, they added about 1.97 million troy ounces as well. I read a fascinating story also last night about how central banks across all all of the major central banks that have purchased, they take an average and they weigh it against their FX reserves, and they're all right around 30%. You got China giving their FX reserves only sitting at about 8%. They believe that China will continue to add to it, and they'll bring down the dollar holdings. And if you look at dollar, you go back 1 month ago, it was like 43% of most of these central bank holdings as far as FX weighting. That's come down to 40. And then you look at gold, how it was about 23%. Now it's at 30. They say that gold futures, and this isn't a price target or anything, it's just an observation. If it gets to about $5,790 per ounce, that at that point the curve will hit each other. And the weighting here will be that gold and the dollar are going to have the same on average across all central banks. They will make up the same amount of the reserve that they have in place here. So just another fascinating read. It was really that India squeeze story, and I was amazed that I actually looked up the Instagram person, and they had about 3 million followers out there as far as saying that, hey, with gold at record highs, why aren't you buying silver instead? And we saw this in China, where a lot of their retail, where they normally purchase a significant amount of gold, what sparked the platinum rally originally was that shift over in sentiment, where people, instead of buying gold and gold jewelry, they went to a cheaper alternative of platinum. Now you look in India, where it was gold, now they're looking at an alternative of silver. And again, I talked about how you get into like solar and you get into other aspects here, where when prices get too high in certain key commodities, the cure for high prices is high prices, because demand will start to change from here and there on particular commodities. We see this substitution effect take place. And we see it in the agricultural markets all the time. We see it in the livestock markets, where they'll swap out. We'll see lean hogs take off. We'll see live cattle take off. We'll see feeder cattle. We'll see this rotation occur. We see the same thing where it's beans, corn, and wheat. They do a rotation as well in there. If they start looking at different alternatives, when cocoa prices were going significantly high, they were looking at alternatives and different things that they can use for that, whether it's a vanilla extract or something else. So people just swap out when prices get higher here. So looking at that silver market, though, one thing I'll also look at, and I publish this, is the probable ranges on it. And you could see that as volatility increased, those probable ranges expanded out, and it only hit the second level of support here on the overnight session. And I saw a lot of active buyers here come in the overnight session as well. So you guys got any questions, shoot an email to info@bluelinefutures.com. And remember that futures and option trading does involve risk of loss, may not be suitable to all investors. Good luck, good trading.